Thanks to Kerry for bringing the Precious Metals Investment Symposium to Perth, a fantastic venue for it. I'm here today to talk to you about Blackham Resources, which is a emerging gold producer in Western Australia. So for those that aren't from Western Australia, you can see Walloon is located in the middle of Western Australia. You can see that red dot down there, and we're at the top end of the Kalgoorlie, Norseman Kalgoorlie-Walloona Gold Belt. So about 700 kilometres north of Perth, 600 kilometres north of Kalgoorlie. Over the last 7 years, Blackham has consolidated the entire Walloona goldfield. It's over 1,100 square kilometres of tenure. We've got over 55 kilometres of strike. It's a very big tract of land, but that tract of land's also produced over 4.4 million ounces of gold over the last 120 years from when gold was first discovered in Walloona. 7 years ago, we started consolidating that belt. In 2014, we bought the Walloona mine and plant itself. We started mining just over 2 years ago and producing gold. And over the last 12 months, we produced about 70,000 ounces of gold. 40,000 of that was in the last half through to June. So we had a 31% increase in gold production during that period. The resource we've got there is 6.7 million ounces of gold at 2.2 grams per tonne. So there's a huge amount of drilling that's gone into defining that geology, and we can tick that box with 58% of that to an indicated level of confidence. That's the hardest part in the gold mining industry in defining the gold in the first place. So right now, we're targeting to do between 77 and 89,000 ounces this financial year. Last financial year, we achieved 70,000 ounces with a step up in production in the second half. We expect to maintain that step up production and hopefully have a better half than last half, production-wise and cost-wise. Our plan eventually is to ramp this operation up to over 200,000 ounces a year. So with 6.7 million ounces of gold, it doesn't make sense you keep producing in the order of 80,000 ounces a year. And I'll talk you through our plan on a very capital efficient step up in production there. The expansion PFS that we published on that expansion plan is looking at producing over 207,000 ounces a year at an all-in sustaining cost of under $1,100 an ounce Australian. We've got 4 large gold systems up there, and one of them is refractory, the other 3 are free milling, and I'll talk you through the various areas we're mining. So over the last 9 months, we had to sort out some mine sequencing issues we had in the first half of up to December 2018, and that was primarily driven by not being able to mine enough ore fast enough to fill the mill. We had a few geotechnical issues around the pits, and that accumulated in some mine sequencing issues that we resolved in January, and since January productions of gold's been going strong, and we're generating some good cash flow. The operations have been further de-risked during that time. We've also strengthened the management team. Since January, we've had Greg Fitzgerald, Tony James and Jeff Jones join the board, and all of them have got significant experience in gold mining and in gold mining in Western Australia. We've been strengthening the balance sheet and also divesting some of our non-core assets, and if we've got time to talk about that, I'll talk you through that. Right now, we're trading at a significant discount to our peers, and there's a value opportunity there, I think, at a time when the market's not rewarding junior gold producers. We're continuing to strengthen and lengthen our reserve base, and we're expecting, like I said previously, we're continuing to improve the quality of those reserves with a view to creating larger margins and also a longer mine life. So right now we've got cash flows coming from stage one. The areas we are mining at the moment, down at Matilda, we're also mining back at Wiluna in the open pits and also in the underground. We've been mining the underground at Golden Age there over the last 2 years. Recently we've started mining at Wiluna as well. So you can see the September and December quarters there. The gold bar represents gold production for the quarter. You can see, we've produced about 30,000 ounces during the September and December quarters. That stepped up to 40,000 ounces during the March and June quarters. And we're pretty confident we'll beat that run rate over the next half. We've been processing at over 2 million tonnes per annum run rate through the plant. You can see the green line there, and each quarter we've improved the throughput and the efficiency and optimised the plant. We've averaged 1.5 grams per tonne for the last half, and we're hoping that that grade profile will start to kick up this quarter with some higher grade ore coming out of the Wiluna areas and also the Matilda area. All-in sustaining costs last half were $12.90 Australian, and following on from Sean's discussion earlier, Blackham does hedge, and at the end of last quarter I think we had about 30,000 ounces hedged at around $17.40. It's good to lock in your margins when you can. We generally hedge up to between 30 to 50% of our first year's production. And that way, if there is a drastic change in the gold price, it gives us time, to change our cost base and move our operations to ensure they'll stay profitable. Forecast guidance for this year is 77,000 ounces to 89,000 ounces at an all-in sustaining of $12.50 to $14.50. We're aiming to hit the top end of that guidance, which would result in being at the low end of on the cost curve as well. So this is the Matilda mine where we're currently mining. We're mining in the M1 and the M2 pits. We've done most of the heavy lifting in those pits over the last 2 quarters, and we're now getting into the juicy payback portion of those pits that are increasing the grade profile through the plant. The Golden Age underground has been generating cash flow for the last 4 quarters, and we're expecting that to continue. Right now, we are forecasting Golden Age continue to December. We'll have a little bit more to say about that shortly, but we've managed to maintain a 6 to 9 month mine life on Golden Age because of the nature of that ore body, and we'll continue to extend the mine life there. So looking at where we're extending our free milling mine plan, the areas we're focusing on, I'll talk you through shortly, but this is the success we've had in growing our resources over the last 7 years. Starting out with about 500,000 ounces of resource we acquired in blue in 2011. We very quickly grew that to about 1.5 million ounces of resource. We acquired Wiluna in 2014, and you can see the success we've had in growing the resources since then. All of those have been added at a cost of $7 a resource ounce, and our reserve ounces, I think, have cost us in the order of $14 a reserve ounce. So, when you're selling at a $300 to $400 margin, that's a pretty effective business model. So over the last 6 months, we've been focusing on extending the oxide mineralisation at both Matilda and Wiluna. I'll talk you through where we're drilling at Golden Age and having some success there. And we've also had some good success in the Lake Way area, which is 20 kilometres south of the plant. Golden Age, is a very high-grade ore body. It's produced 180,000 ounces at 9 grams over about a 15-year period. The bulk of that's come out of the pink and the yellow area in the middle. So that's about 300 metres of dip and about 300 metres of strike there. We've had some recent success drilling deeper, and the area in brown, you can see there's only a small number of holes there, but we're getting some very nice grades coming through on those holes. And there's actually enough area there for another Golden Age sitting below where it's been mined already. We've already had a lot of success at surface as well. And at surface, we've defined the ore body at what we call Golden Age North, over 600 metres of strike. We've drilled it down about 150 metres. The open pit we expect will pull down between 50 to 80 metres there, and then we see some very good potential for an underground ore body as well, with all of the hits there but ranging between 10 to 80 gram metres and being very close to infrastructure. Over the last 6 months, we've focused on chasing the oxide at the Walloona area, and we've had a lot of success drilling just north of the first pit they mined at Walloona, and we've been drilling some cross structures there and finding some very high-grade ore close to surface. Having that high-grade ore going through the plant over the next quarter should significantly improve the grade. We've also put some successful drilling into the Williamson Lake Way area. Sorry, I've lost that slide, so I'll go straight into the growth strategy. So we've also published a PFS, and for a cost of $114 million to put another plant next to the existing plant, we can add in the order of 120,000 ounces of production. Very capital efficient opportunity. Basically, we're looking to keep the existing free milling circuit running at least 1.8 million tonnes per annum. It's running above 2 at the moment, and then we want to bolt on another front end circuit to process the sulphides, and that being in the order of 1.5 million tonnes per annum. This would produce a very big operation, targeting in the order of over 3 million tonnes per annum at close to 3 grams per tonne. So this is the open pits. You see the long section at surface. Some of those pits want to go down over 250 metres deep. You've got 30 to 40 metre wide loads running through that red pit, and there's a series of sub-pits running 3.5 kilometres through the whole system to the north. That's the base load to feed the additional mill. We're still working towards finishing that feasibility, and we'll have more to say about that in the new year. So, just summing up, Blackham, we've got some very solid free milling production coming out of Matilda and Walloona at the moment, and we're expecting to continue to build the balance sheet on the back of that cash flow. Our current reserves are 1.2 million ounces at 2.6 grams per tonne, demonstrating a long mine life for a company our size. Our exploration programs are ongoing, growing that mine life and adding to the value. Having 6.7 million ounces of defined geology, that has broken the back of the growth story, and the rest of the job is really around the engineering and the execution. And over the last 9 months, we've significantly added to the team, and we're looking to continue to add value for shareholders. Thank you very much.